sense on how the business outlook is shaping in today's uncertain global trade environment. Do you think you can hold your own when things are pretty much up in the air with the uncertainty there is?
We are actually seeing a very robust demand pull from US market, which is the largest market. Almost 65–70% of our revenue comes from US. And last year what we saw, certain headwinds like destocking now actually have become a tailwind for us. So we have seen a kind of volume growth, and for the full year we have given a guidance of about 8 to 10% volume growth, and we are confident that we will be actually able to cross that very comfortably. So as far as we are concerned, we are seeing this US market continues to see kind of robust growth for home textile, particularly cotton home textile. So both towel, bed sheet as well as rugs and carpets, we are seeing a substantial growth.
Right. What about the currency weakness? Is that going to be a big boost for exporters like you?
So definitely it will have an impact, but we follow kind of a foreign exchange risk management policy for the last 5–6 years, where we sell 50 to 60% of our receivables on 12 months forward basis. So as we speak, we have about 50% receivables which we have sold in the forward market, and so part of the whatever is open will realize at the spot. But simultaneously, what has also happened is that the cotton prices have gone up substantially. So from 40,000 rupees per candy to about 48,000 rupees per candy. So part of this impact of the rupee depreciation has actually got eaten away by the raw material cost increase. So we will see a substantial impact coming in the next financial year. So as of now, we don't see a substantial impact of currency depreciation.
Okay. Global retailers have also been eyeing India, and we've been hearing that in all the news reports of late, and increased sourcing as well from India. What is your view, and how a role, or rather how big a role could Welspun India play in that?
India has actually a strong country competitive advantage particularly when it comes to cotton home textiles. So India, China, Pakistan, we account for 85% of the supplies globally, and out of these three, only India has surplus cotton. So that and cotton is almost about 45% of our cost. So it's a huge competitive advantage for the Indian players in cotton home textile. And the second biggest cost is the labor cost, which is about 10% of the cost, which is almost 1/3 of that of China right now. And at the same time, we are also seeing a lot of retailers who are entering into the country. So IKEA, Walmart. So we, with our global relationship with them for over a couple of decades, actually we can piggyback right on that and take the advantage of their entry into countries itself.
What's your visibility on revenues and profitability for 2019?
So we have given an annual guidance of 8 to 10% growth in the top line, which is predominantly a volume driven growth. Of course, this guidance we gave at the beginning of the financial year, when in the base case we had a currency exchange rate of about 65 rupees, and we are the guidance for EBITDA margin was 19 to 20%, and guidance for capex was about 900 crores.
Right, there have been big block deals seen in the recent past, big H&I buyers in the market. Any comments? Have promoters raised stake from the market, you believe?
Promoters have not raised any stake in Welspun India, and as a company, we don't, company policy, we don't comment on the transactions which happen in the market.
But given that India has been a cotton growers country, what's the kind of outlook that you could give us on your margins?
Yeah, so margin guidance as of now is 19 to 20%, which is the annual guidance. We don't give quarterly guidance, and as of now, we don't see any reason to revise that. But as we go along, we will see the impact of the currency, and at appropriate time, we can revise the guidance for the full year.